Sue. Chair Harper, recently Senator Reid and I introduced the Veterans and Consumers Fair Credit Act with Senators Van Hollen, who's here today, Senator Smith, and Senator Warnock. Our bill would extend the Military Lending Act's 36% APR cap on consumer loans to those left out of the original legislation, veterans, essentially all other consumers. What impact would this legislation have on loan products offered by federally chartered credit unions?
Generally, Senator, currently there's a cap on interest rates with federal credit unions. It's 18% for most loans, except for our payday alternative loan product, which is a short-term, low-dollar loan product, and that goes up to 28%. Both of those figures are below the 36%, so my answer is not at all.
Okay, thank you, Chair Harper. The FDIC has the authority to take action against anyone who misrepresents that it's an FDIC-insured bank. I understand, Chair McWilliams, that FDIC recently proposed a rule because this has been happening more often. Is that correct?
That is correct. There is a lot of confusion.
Thank you. Okay, good. I hope the FDIC cracks down on non-bank companies that mislead consumers. Yet, during your tenure, Ms. McWilliams, you've expanded the reach of non-bank financial tech firms into the banking sector, rolling back rules that make it easier for non-banks to engage in predatory lending and edge out small banks and credit unions. You've approved 2 industrial loan charters. At the height of the pandemic, one of these companies, Square, has a poor track record on consumer complaints, but it just announced it will buy installment lender Afterpay for $29 billion, significantly expanding its lending business. We always hear promises about how financial technology and innovation will help the underbanked and foster financial inclusion, yet these promises always go unmet. Instead of doing favors for big business, it's your job to protect consumers and depositors whose hard-earned money is ultimately at stake. Now, Mr. Sue, a question for you. Over the last several years, the Fed's Vice Chair of Supervision, Mr. Quarles, led the effort to weaken capital requirements, as you know, for the largest banks through changes to stress test models and so-called tailoring of the stress capital buffer. The Fed has also announced that it plans to seek comment on changes to leverage requirements at the biggest banks. Will you work to reverse the damage, Mr. Sue, the Fed has done and urge for higher capital requirements in the biggest banks?
Maintaining strong capital requirements is an imperative. It is important that the banking system remain a source of strength for the economy and that they they are held to the highest standards.
Okay. I'll take that as a yes. Let me ask you one other question. Thank you again, as I mentioned in opening remarks, for starting the process of rescinding your predecessor's misguided Community Reinvestment Act rule. When Chair Powell was before this committee recently and a number of times over the last month, and then a number of times he said the Fed was committed to interagency comprehensive CRA modernization and that the Fed and the OCC were jointly reviewing comments on the Fed's proposal. So 2 questions. Does the OCC share the Fed's commitment to comprehensive CRA modernization? And second, what do you think the timing will be for this proposal?
We do share the commitment, and we do with the Fed and with the FDIC. We've all committed together publicly that we'll be working together to strengthen and modernize the CRA. In terms of timing, it's hard to give an exact set of dates around that. There is a lot of urgency. I can share that the teams are working very quickly. We have given internal kind of aggressive timelines on that, but it is a complicated rule. We want to make sure that we do it right. And so that we will be working with all deliberate speed.
It's important you do it. It's important you do it right, of course. Thank you, Senator Toomey.